The most certain way to succeed is to always try just one more time. That's what Thomas Edison said. My guest today is Bakari Akil, who took 6 years to buy his first business as an independent sponsor. He's going to tell us the entire story, the trials, tribulations, and just grit and energy to stay with it. Welcome to Top M&A Entrepreneurs. Let's get to the show. Well, welcome to the show, Bakari. How are you doing?
Thank you very much, John.
Yeah, well, let's talk about your journey here of acquiring a company. Because you and I talked on the phone a little bit about it was a long and arduous journey. So how did that start? Where did you start thinking about buying companies?
Sure. So for your audience background on me, I'm the founder of Gravesall Capital, which is a private equity firm I founded in 2015 to buy companies, specifically to buy companies. So far, I've done a few acquisitions. Last year, I acquired a burlap bag manufacturing company based in New Jersey. We have locations all around the states now, New Jersey, North Carolina, Tennessee, St. Louis, and Pennsylvania. So that was like a $30 million company that I acquired there. Before that, completed an acquisition of an educational technology company in partnership with a family office. I did the first deal that I mentioned, the burlap deal with a private equity firm. I did this deal with a family office, an educational technology company, $25 million company as well. And separate from that, I teach entrepreneurship through acquisition at Cornell's business school. So teaching the MBA candidates there how to acquire companies. And have been in this acquisitions world, as you know, since that time. But my start in this space really came from just a simple motivation to not be poor anymore. It's just
that's a lot of us. Yeah.
Yeah. I wanted to be rich, and I was trying to figure out how do you do it. And so I was reading lots of books about the subject and watching videos online and reading and asking people questions and trying to get a sense for things. And I came across this concept, this acronym actually. The acronym was LBO, and LBO, I didn't know what it meant, and I kept seeing it popping up in different books I was reading about wealth building. And eventually I typed it into YouTube and came across the concept of a leveraged buyout, where an entrepreneur or a company looks for a good business in an industry that they like, and borrows lots of money and puts up a fraction of the purchase price in cash, and acquires an entire asset. And there was very little startup capital needed to get this done. It was just the effort of looking for a good company to buy. And over time, I learned that there were programs at major universities that were teaching MBA candidates how to buy companies, at Columbia, at Harvard, and at Stanford. And in fact, Stanford was where, a lot of the subject really got started, where like formal professors were backing and supporting MBA candidates who were considering buying a company. I at that point had not even finished undergraduate, so did not have a business school degree. And so the likelihood that I was going to be able to access that information was remote, regardless of whether or not I got into a school, because I still needed to finish undergrad and then eventually apply. And then it was going to be like, maybe 6 years after first learning about this concept for me to actually be able to get a formal education in the subject. And so I really wanted to speed that up. So I found out that there were some courses being taught in the subject at Columbia. I lived in New York at the time. And so I just went to Columbia and sat in the back of the class. And
you didn't pay for the class? You just audited it?
I just audited the class, sat in the back and learned from the professor this subject of entrepreneurial acquisitions, where entrepreneurs would go out and look for companies to buy. And he taught from beginning to end how to search for a company, how to evaluate a company, how to raise capital for a company. And I took that knowledge from that course and started developing relationships and connections. And that's ultimately how I ended up in the position I'm in today.
Yeah. So how long did you finish the course, or just go,
Oh,
I know enough. I'm going to go start buying companies, or what?
so usually, I've actually never shared this on a public platform, but not only did I finish the Columbia class, but I flew to Stanford and sat in that class. And then I went up to Harvard and I tried to sit in that class as well. So I was very hungry for, at the time, 2015, 2016, there was very little defined information on this subject. There weren't very many conferences. Like if you wanted to know anything about how to acquire a company, you basically had to just read books about private equity, and what KKR and Blackstone and like the major firms are doing. And, they have access to a whole different like stratosphere of capital, and their teams are so massive and well equipped. The corollaries are there where like you can glean a little bit of how to do it from the stories of how they began, right? Like how KKR began and how Blackstone began. But it's kind of hard for you to use, a proxy for what a multi-billion dollar corporation can accomplish when it sets its mind on acquiring a company, when you as an individual is trying to do the same thing as, without even an undergraduate degree. And so it's just
That's
like a different,
like that. You could see the path, like
yeah.
work for a company, investment banker, 100 hours a week,
Hmm.
and then go to that and go start a private equity firm, which is you're a slave to New York and the investment world. That's a
Right.
completely different path. Yeah.
It's a totally different path. And I was just trying to, how do I figure out how to go from where I am, this poor, broke kid, to acquiring a multi-million dollar corporation? And so the information was very limited at that time. These days, there's a lot more information, books and all this. But, this
All
was
kinds of stuff.
before, this was before Rick and Royce from Harvard Business School published Think Big, Buy Small. This was before Walker published Buy Then Build. Like this is way before all of this information was accessible. And so for me, it was just sit in the classes and try to get them information.
Yeah, you're just consuming information, trying to learn. Yeah. So what happened? You finish these courses, and then you start go start looking for companies, start raising capital. What does that look like?
To be fair, I was looking for companies while I was in the classes, right? Like it's
Yeah.
this whole game, this search is a very proactive thing. You gotta, be putting a lot of energy into it. And in fact, I often counsel people when they ask me for advice is, I'm happy that I went and I sat in those courses, and it's a great part of like the personal story of who I am, just to giving an example of like what it takes to like get this thing done. But ultimately, there are plenty of people who bought companies who never sat in a class, who never read a book about this subject. They've looked for a company to buy, and they, go out and, they bang their head and they make mistakes, whatever, but they bought a company. And then there's a lot more people who have read all the books and they know all the subjects and they know all the acronyms. They have all the information in the world for how to do it. And then you ask them, when was the last time you submitted a letter of intent? When was the last time you, spoke with a business broker or had a management meeting with somebody who, looking to sell a company? Like, when was the last time you put some action behind the work? And that is much less because it's so much easier to go and read a book or watch a YouTube video than it is to actually go and engage and do the work.
A lot less risk.
Yeah. And so for me, that's what I was spending the majority of my time doing whenever I wasn't learning. I was actually going out and making the mistakes and talking to investment bankers, talking with business brokers, getting rejected, sending out thousands of emails. Like that was a big part of like my process of just like going out, trying to get it done.
So what was your efforts producing? What did it look like originally when you first started?
What did it like in terms of like what it produced?
Yeah,
Nothing.
some of your outreach and go, hey, who are you? No, you're not an investment banker. No, thanks. Yeah, you're wasting my time.
Nothing, and for years, right? Like not like nothing, and like there was like a spark here and there, and it was literally nothing. Like I would go literally an entire year having gone on management meetings and met people, no transaction transacts. The next year doing the same thing, no transaction happens. The next year doing the same thing, no transaction happens. And by the fourth year, you talking to people and they say, hey, what do? You say, I buy companies, or I'm looking for a company to buy. They say, weren't you weren't you doing that a couple of years ago? You didn't get anything done?
So this is 4 years of searching.
It was longer than that. It was from first learning about this to getting it done. It took me until 2021 to complete my first full out transaction.
So this is 2015 to 2021. That's like 6 years.
Yeah. Starting from zero. And so it was a struggle.
What was the inspiration? Like, who did you like, what sources of information did you follow to keep going? Like, just keep at it.
So I've told people this story before, right? Like there's a quote that I really appreciate by this guy named Nipsey Hussle, rapper, and he says how hard it was for him to get from where he was to, you know, the accomplished Grammy-winning artist that he is, or that he was, and he said, you know, he went through every emotion to try to get through this thing, to get this thing done, and the only distinguishing quality between him and somebody else trying to get the same thing done was that he didn't quit. Right? That was the only thing that made it. He was like, I went through sadness and fury and happiness and elation. I went through every single emotion thinking that this thing was going to happen sooner and sooner and sooner. But it's just about not giving up ultimately. And you know, in my case, I had an enormous amount of it's sort of like a rocket ship, right? Like a rocket ship takes so much energy to push itself from the ground, right? And to actually, you know, achieve escape velocity. It takes so much. And that's what I was in. I had a whole bunch of like financial challenges that I was dealing with at that time. Personally, housing problems. I didn't have the education behind me. I didn't have a network. I didn't have all these things. So I'm fighting against all the people who are like me, who were similar to me, trying to do the same thing. They had MBAs from Harvard as a school. They had
money.
You know,
they had backing.
They from backing. They knew friends and family. They had all this, you know, support. And so I'm doing the same. I'm engaged in the same work without most of those, you know, most of that support. And so that's why it took so much effort. And so I would say, you know, the majority of people who are listening to this are probably not in the same situation that I was in. I found this opportunity as literally being, in my opinion, the most likely, the highest probability outcome for success. I knew where the capital was. All I needed to do was find a good company to agree to sell it to me. Right? Like that was
that's it. Yeah. Did you make any bargains with the almighty power and say, you know, 6 years later, if you don't do this, I'll go get a job. I'll go get a job. Yeah.
So there were moments. So like the hardest moment happened to me in my 4th year where I had found a company. I had, and this is something that happened multiple times throughout the process, where I had found a company, I had pulled together their capital, and for some reason, the transaction didn't happen. The first time that happened to me was in 2017. I pulled all of the capital. It was acquiring a medical practice, a healthcare center in New Jersey. I pulled together all the capital for that deal. That was like a $10 million transaction. While we were going through due diligence, the doctor had took his foot off the gas and wasn't actually seeing patients because from his perspective, the transaction was about to happen. So, you know, game over. And so as we were going through due diligence and finishing the quality of earnings report, the report came back and it was demonstrating what was happening while he was still running the practice, or supposed to be running the practice. And the business had declined in value by like 40%, which had a massive impact to EBITDA. EBITDA went from like 2 million down to like something like 1.4, 1.6. And so all of the perspective that we had on the business, thinking that it was actually able to survive without the owner, all that went out the window. If this guy could take a break for 2 months and the business declined by that much, then, you know.
Yeah. Did you have another doctor ready to take his spot?
So yeah, we did. We had the entire structure ready, but he wasn't in place yet. It was the current doctor who was supposed to run that. And so when he put his foot off the gas, my investors, my bank, everybody goes up and, so we have to go back to the seller and say, hey, we got to renegotiate this deal. And the deal went from being like a very lucrative offer to being a very conservative and protectionist offer because of how much we learned that the seller taking his foot off the gas can have that much of an impact on the business. That happened in my second year. My fourth year, and there were deals that happened in between, but my fourth year, I came across a transaction there, pulled together all of the finance for that transaction. That was like a $7 million deal. And the 2 weeks before we were supposed to close, the seller rejected the letter of intent, rejected the exclusivity period, backed out of the transaction, and then a month later sold the business to his competitor. That happened in the middle of this process. When that happened,
Yikes.
I was walking through the streets of New York. This is 4 years in, right? I'm walking through the streets of New York, like tears coming down my eyes. I'm like, I quit. It's game over. I'm not doing this no more. This is crazy. Like, I was literally like, when I had a lease in progress, getting ready to move to a location where the company was at to actually go and run the business. Like, everything was in place. And when the seller backed out, that was probably the most devastating thing that happened to me. And
was there any voices in your head, like sometimes a relative or not, go, just keep going, Bakari, just keep going?
No, there was nothing.
Nothing. Oh my God.
There was nothing. Like, in fact, it was the exact opposite. At some point, it starts feeling like delusions of grandeur. Like, so what makes you think that you like the most likely outcome of a guy with no money trying to buy a multi-million-dollar corporation is that it's not going to happen.
Yeah, a lot of negative talk comes in, a lot of weeds come into your head. Yeah,
it's not unusual for somebody not to buy a company that costs $7 million when they don't have $7 million, right? Like, that's the most likely outcome, right? So everything in my mind was just like, man, maybe I really can't get this done. And what I always give myself credit for, and sometimes I want to go back in time and just pat myself on the back, is literally when that deal fell apart, I was despondent. My investors were sad because we had all these plans for the business, that and the third. And what I did was I went to my computer and I sent a blast email out to all of the entrepreneurs who I'd been considering trying to, pursue, and reached out to the owner of a company. One of the people on the list was an owner of a company in Connecticut, an educational technology company. And he invited me out to come meet with him in person. And a year later, that deal was closed. And so literally at the moment when I was as I said, I was crying in the middle of New York, talking about how much I'm done. It's not going to work. The street. But, luckily I this thing in me of not giving up, pressed the button, reached out, pursued that transaction, and it was the first one that closed.
Yeah. So what did that look like? You reach out to them, they say, I'm interested in selling, you meet up. But what were you putting in place as far as the investors and the capital to require to buy this $25 million education company? Tell us about that. Yeah.
Yeah, I mean, so in that case, what I've been doing, and one of the most valuable things I've been doing since the beginning of my my approach, is almost any time somebody talks to me and says they're an investor, I have a list and I add them to that list. Anytime I get an email from somebody or I connect with somebody on an online platform, they say the same thing, I put them on the list. And so that list of potential equity partners is like over 1,000 names. And so whenever it's time for me to do some outreach for capital, I have lots and lots of options for capital. And I've been doing that since 2015. That's when I first got started. You
found that to be very important. If you're going to be financing a deal, you need to have investors in your back pocket ready to go.
That's right. And so separately from that, I even created this organization in New York called the Alternative Investments Club, where I would invite investors to meet me at the 40/40 Club on a weekly basis, and investors, entrepreneurs, like a lot of different type of business people in New York, and we would talk about different deals that were available to invest in New York. So people would bring like a real estate deal or a startup that they were looking to finance, or a movie that they were looking to get completed, all types of different deals. And there would be investors in the room, and there'd be entrepreneurs in the room, looking to do a deal together. And every event I would get up and let people know, hey, I'm looking for a company to buy. And then I would collect everybody's contact information, and I would collect the names of the people who identified themselves as investors, particularly who were focused on M&A transactions. And so And I hosted that event every Tuesday consistently from.
And the banks would send their investment brokers to these meetings to look for new deals.
Investment bankers would come to the event. Business brokers would come to the event. Banks themselves, so representatives of the lending arms of different companies, and direct investors, people who were looking to deploy capital, all would show up at that meeting on every Tuesday for literally from 2016 to 2020, right before COVID, is when I stopped personally running the meeting myself. And then from 2021 to 2022, I had a partner who hosted the meeting virtually when everything went to virtual.
So this is like a meetup group you started yourself. Oh.
That's right.
Gotcha.
Yeah. It became the largest private equity meetup group in the tri-state area. If not the largest, it might be the largest on meetup.com, I think.
That's cool.
There's only one organization that was larger than ours. I think that was the New York Tech Meetup. That was the largest. I think they have 50,000 members, and mine was a little bit smaller than that. And so that was what I did to develop relationships with investors. And then separately from that, I was on like different platforms and places like searchfunder.com and others to go and meet with investors and connect with investors. The search fund community would have different events at Harvard, at Columbia. I was invited to speak at Columbia, so I would meet different folks through that. So really anytime I could meet somebody, the Association for Corporate Growth, ACG, I became a member of that group, so I could meet investors through there.
That's what they taught at the Cornell and Stanford, right? They tell you, like, you got to have investors, you got to have the money in the pocket.
I mean, absolutely. Yeah. But the thing that was unique about the Columbia, Stanford, Harvard class was that within the search fund community, there are professors who would directly invest in those deals that their students would find, and they would introduce their students to investors. And so once I learned about that, I was thinking, hey, maybe I could, like, by coming to those classes, I could get connected to those investors. And so I ultimately ended up doing that, and ended up meeting a lot of investors from the search world. And my first investor, the first one who backed me on the educational technology company, came from the search fund world, like somebody.
This was a family office type of deal, or what was it?
That's right. Yeah.
So let's talk about the details of that and what that looked like, how the cap stack looked like, without being a little sanitized, because you probably can't talk about it. But what did that look like?
Yeah, so I mean, I went to the family office to complete the majority of the equity financing, and we brought an outside bank to complete the debt financing. The CEO of the company remained on and continues to run the company as CEO.
But he cashed out how much? Like the CEO cashed out 60, 70% or something, or what?
So I can't speak specifically about his his deal, but I can say the completed deal, 100% buyout. And everybody was happy.
Yeah.
Including me.
And what's your role? What percentage of owner are you if the family office is I'm trying to sanitize it. You don't have to be, very specific. Just kind of give me a sense of what that looks like.
Yeah. So what I'll do instead is I'll talk about what I'm defined as in the market, in terms of like what my role is. Yeah. And talk about the different forms of compensation that come as a result of that, and then let the viewers extrapolate for themselves what that would likely look like.
Yeah. So for instance, just give you a sense of, there's 1,000 people going to watch this in the next month, and they're going to go, well, how do I do what he did?
Exactly. So I'll describe it. So what I've ultimately become defined as in the market is an independent sponsor.
Okay.
And so that's separate from what like a search fund type investor would be, or a type of searcher would be, where the type of economics that they would get. And so there are three forms of compensation that an independent sponsor tend to receive when they complete a transaction. The first is a closing fee, which is usually about 2% of the overall transaction value of the deal. Then there's a management fee, which is usually about 5% of the ongoing EBITDA of the company. There's usually some floor, some ceiling set on it. It might be restrained by the total compensation that is given to the CEO of the company, or it might be constrained by just some arbitrary number. Hey, you get 5% of EBITDA up to $500,000 or something like that. And then lastly, you get some percentage of carry plus a promote, and those really move around depending on the quality of the transaction, the amount of direct capital that you're investing yourself, and your ability to negotiate the value that you're going to bring to the company between you and the investor. And so on the transactions that I do, that's the frame that I'm bringing to each of the deals that I've done, including the.
And you had that agreement with the family office before you brought them the deal to make sure that
no. So when I find a company to buy, I'm at this point I'm usually looking to complete the transaction with one investor, if not one or two investors. Initially, when I first tried to do transactions, I was trying to pull together like probably 10 or 15 investors for a transaction. But these days, I usually do with one large investor instead.
What's the learnings about that? Why?
So because at this point, I've started moving higher in my transaction value. So as I mentioned at the beginning, I started doing deals that were like, $5 or $7 million in total enterprise value, and ended up doing much larger deals. The educational technology company being a larger company, the burlap bag manufacturing business being a larger company, and so having moved up in the size and the type of businesses, the amount of equity that's needed is significantly much more. And so, in the deals I was doing before, I might be able to pull in an investor who could invest like $75,000 or $100,000, and it would make sense. But when I'm raising like $9 million worth of equity, $100,000 is not really like going to move the needle on that type of transaction. And the amount of investors who themselves can, make a $1 million contribution, that's a limited scope of folks. And so I've learned to identify certain partners that already know what the independent sponsor dynamics are looking to move that amount of capital for a transaction, and are willing to partner with independent sponsors. And so that's what the overall learning has been.
Yeah, and they're private equity firms that need to put their money to work.
That's right.
Yeah. And you usually got some kind of a market rate plus. Yeah.
That's right.
Yeah. Yeah. So how does that education software company going? You're not actively managing it because of the role there, but it's still throwing off a lot of cash for you, it looks like.
Yeah, I mean, as I understand, it's still doing pretty well. These days, most of my focus is on the manufacturing company that I mentioned, the burlap bag manufacturer that I acquired last year, in partnership with Granite Creek Partners, the private equity firm I did the deal with. I sit on the board of directors of that company. Actually, I was just at the board meeting last week. Went to meet with the CEO and most of the senior management of the company, and also with the rest of the Granite Creek team. And so that was that's the big focus of mine while I'm looking at other deals.
Before we go to the burlap, 6 years to do a deal. What did that teach you about you? Because that is like never give up kind of grit.
Yeah, I mean, I came in. So if you go on my website, the logo that I used for Graves Hall was a fast forward button. And it was because at the time I was 25, and I was like, I just found this like cool hack to like skip past being a little lowly employee in a little lowly organization to becoming the CEO of my own business. And I'm going to be able to get this done in like 2 years. Like, should be able to wrap this up. I'll be surprised if 18 months later, I don't own my own company. And when 18 months passed, and then 3 years passed, and then 5 years passed, like, I started looking at that fast forward button, like, I thought this was supposed to be a lot faster.
Somebody else is saying that's not how time works, Bakari.
Yeah. So now that said, I have friends who were the exact same age as me, did not have an MBA, and went out around the same exact time as I did, and went out and bought a company, and they run those companies still to this day as CEO of those businesses. So it wasn't that this model was like was far flung or it was out of reach. It was just it wasn't in my my cards to get that transaction done at the time. But
Yeah.
once it did, I would say, my life is pretty good these days, right? Like uh, as you know, I've been traveling the world. I live in a different country every month. And most of that is made possible by the transactions that I've accomplished over the course of the last couple of years. The fees that I generate from those companies, the fact that I found good businesses that are successful in their own right, that have good management teams behind them, and look like they're going to continue to be profitable and successful going forward. I'm providing good and actionable advice to the teams when I attend my board meetings. Like, this work has been fulfilling and exciting, and it looks like I've built and set up a future for myself that's going to be pretty sustainable.
Yeah, let me ask you something about that. Whatever Nipsey Hussle says, to sometimes the success doesn't come till you're the right person, or that the whole environment changes to what who you are now. What everybody's going to watch this and go, "Gosh, I'm not going to take 6 years to buy a business," because everybody's fast forward today, right?
Mm-hmm.
Did you have to become the right person to accept this, to be able to?
I don't think so. I think I was ready to be the guy I am right now in 2017. and I don't want anybody. And truthfully, I don't. I as I said, I very rarely share the actual length of time that it took to get these things done. But I don't think that it actually takes that amount of time. It's just I had a unique set of circumstances that required a lot of effort to get past, right? Like, I had to really accelerate a lot of, there was just like a lot of things that I personally had to deal with. That I didn't have. I didn't have a network, so I had to create that network of capital. I didn't have the job experience to understand how to do an M&A transaction. I had to learn all that. I didn't, before I learned how to buy a company, I didn't really understand business as a business person, right? Like, I remember the first time that I was exposed to the phrase EBITDA, right? So there was like a lot of learning that I was doing simultaneously while I was trying to buy a company. And so I would say by 2017, I think I knew enough that I could have bought a company. Who knows if I would have been successful operating the business, but I definitely knew enough that I could have bought a company. But I didn't know yet how to pull together the financing and to identify issues that were popping up so early in the deal that were going to eliminate a transaction from the scope. But to be fair, like, as I mentioned, the healthcare transaction, that was completely out of the ability to perceive ahead of time. These days I make it clear to operators, you should continue running your companies. But there's really no reason I should have to tell somebody who's been running a company for years that they should continue running their business. I'm constantly trying to evaluate and tell if somebody's gonna like back out of a transaction at the last minute. That was, you got
spider sense for that now, don't you?
Right. So these are things that pop up.
These are things that could go wrong. I have to go back to you. There's a lot of the stuff you talked about is learnable, the EBITDA and the run of the business. But I've had a couple guys on my show that went to the top universities, and they brag about their alumni network, which my university in Northern Arizona, there's like nobody in my network I can call goes, "Oh, he's a billionaire investment banker in college, he's putting money into graduates." It's not going to happen. That is invaluable. That is when they say that, I go, "Yeah, you're right. Yeah, you got a good network." But so let's talk about this Burlap company and how that came about, how you found it, and then how you structured it, because that was a lot different. You have a more active role in this one.
I mean, so the Burlap deal, I came across that company. I was introduced to it through an investment bank that was looking to sell the business. It was a decent sized company, and I wanted to pursue it for two reasons. One, it happened to be very close by to me. I'm in New York. The company was based in New Jersey, so I just hop in a car and get there within an hour. So for me, it was valuable for that. Second, it was in an industry that not many people were looking to pursue. It was an off the beaten path kind of industry.
It
Most people
sounds
don't
like a
even thought about it
monopoly,
as a,
almost a burlap company. Yeah.
the overall industry size, total addressable market, is something like $200 million within the United States. This company has a massive portion of that TAM at its current revenue size. And, with a couple additional acquisitions, we probably would have like a meaningful size beyond where we're at. And so I wouldn't call it a monopoly. I don't want, the people who regulate monopolies to come to the board. Like, there's so many more
No, but
important
there's a
monopolies
moat
that
in
take
the
time.
industry. There's a
But yeah,
moat for
so there's
you. Yeah.
definitely some good competitive dynamics here.
Yeah.
And the most important competitive dynamic is, I talk about burlap all the time, and nobody's excited by it. So,
I sell burlap bags. You mean for Halloween
right.
for the jumping things? Yeah.
Exactly right.
Right.
And so nobody thinks about it, and it makes
Yeah.
a great deal amount of money. It stays, well off the radar of most people, and is an exciting business to be in for me.
Yeah. So the investment banker made the introduction. You reach out to them.
Mm-hmm.
They're motivated sellers. Your job, was our price already agreed on,
No,
or?
I have to negotiate the price, put together the letter of intent, make a good structure that makes sense for the deal, price it correctly, and then go out and raise capital against that letter of intent.
Yeah. And then this 1,000 list, did you send it out to your investor list, and and a couple bites, a lot of bites, no bites interested, or what happened?
I had 11 term sheets from investors and lenders to support me on that transaction.
That sounds good. That sounds like a good, yeah.
Yeah. So so when I decided to partner with who I partnered with, Granite Creek, I was being very thoughtful, and I thought Granite Creek was the best partner for the transaction. They came from a space that was very similar to the type of small businesses that the NYP Corp is, and so I had a great deal of experience in similar type of industries, and so I wanted to have them as partner.
And when they came with the term sheet, that was with equity and debt, or the whole amount, or did you have to get a couple partners for that?
Yeah, so I again, I don't want to be so specific about the.
You don't have to name names, just like
but just to be fair, like Granite Creek is in a position where it can do all the debt, can do all the equity. There are definitely other investors who can do the same. Sometimes it makes sense to do that, but other times it makes sense to bring in some debt financing as well, separate from the one party. But yeah, so Granite Creek is in position to do that, and so it was at least, being one of the considerations on the table.
Yeah. And then what does your role look like? Now, you're an independent sponsor for that first educational software company.
I'm an independent sponsor by function. So that would be my job title going forward.
Yeah.
Like,
so you're not really actively in management anyway, except on the board of directors.
That's right.
Yeah.
So my interactions with management all come at the board level.
Yeah. And are you going to continue to repeat this, find deals, and then find investors and get paid off this putting the deals together?
So I like the role that I play with NYP Corp, playing a role on, engaging on the board of directors and interacting with the management. I also would like to be in a position to run a company full time as CEO. That was my when I initially came into the space, that was what I was looking to accomplish. I still would like to accomplish that. And so ultimately, I think that depends on the type of deal that I find. I'm constantly talking with business owners. As I've said, I advocate for people who want to do what I do, to go out and look for deals and to negotiate with and have consistent conversations. I think it would be really bad to be in this space and not have put an offer out at least once a month.
Once a month.
I think that you should prioritize that if you're, trying to be a person who buys companies, because it just takes a lot. Once a month is 12 LOIs. That's in the grand scheme of things, that's really not a lot, because more often than not, maybe 60.
Yeah, they're just going to deny it. You're going to swing and miss. Right. Yeah,
exactly. And so, if you can get 12 offers out and get at least 3 negotiations out of that and 1 accepted offer, that's a fantastic ratio. And that's
Yeah.
that's what it looks like ultimately. And so that's what I'd recommend is, people make sure that they're, putting out offers.
Why do you feel the need to want to manage a company? Just kind of test yourself and see
it's what I came into the space to do. I wanted to buy a company and run it full time as CEO. And so it's a goal that I've had since 2015 and one I'm looking forward to accomplishing. Sure.
Yeah. And do you still run that meetup, and you do visiting instructor over at the MBA program, right?
Right.
For
so
deal
at Cornell,
flow.
I'm a visiting lecturer. And so I teach the MBA candidates there how to buy companies. I think my class is the only class I think they actually have at Cornell where they teach the MBAs how to buy companies.
What else do you do to nurture your deal flow network aside from those two things, which are fantastic?
Oh, I mean, I'm constantly having conversations with investment bankers, putting up word out. I join podcasts like yours, and I appreciate the invitation. And last week I was at the M&A Launchpad conference.
How'd that go?
It went pretty well. I had like 20 people standing in line waiting to talk to me after the lecture, so I appreciated that. So I guess it went pretty well. But yeah, it was very good.
Yeah. And when you got into this business, you started at lower middle market, and you eschewed SMB. Why was that?
I still think of myself as an SMB investor. I think that the lower middle market or the lower middle market and SMB market is around where I play. Like I look for businesses with $5 to $20 million in revenue. I think way below that, probably just EBITDA is just too small for me to excite the investors who I would need to participate in transactions. But way larger than that, I would have to interact and negotiate with too many large private equity firms that were also playing in the same space. And so I stay pretty much in that range, for 5 to 20 million in revenue. That said, NYP Corp is significantly larger than that, but yeah, that's about the range that I play in.
Yeah. And what are the deals, like the speed of the deals look like now? I mean, you're out there doing stuff. Do you think you shorten the 6-year span period to a lot
to be fair,
faster? Like you remember Wayne Huizinga and the John Chambers, Cisco, they were buying companies. I mean, 12 a year, like more than that.
Again, that's Cisco, right?
Yeah. They got a lot of money on their balance sheet. Yeah.
Right. So I first came across the educational technology company in 2019. That one closed in 2021. So it took 2 years from beginning to end. Now, to be fair, that COVID was in the middle of that. And so, but yeah, from beginning to end, that took 2 years. NYP Corp, I came across that company in 2021. We closed it in 2023. That took 2 years. So, and then right now I'm in the middle of a transaction that should close in the summertime. And I first came across that company in 2022. So it looks like that's going to close in 2024. That's going to be 2 years. So
that's a 2-year window. I tell
about 2 years.
All my students, be patient, please.
Yeah, it's a great deal of patience to get these things done.
So, what kind of the top 3 lessons you would tell somebody watching this video about, understanding buying a company? Is patience, keep at it. What else?
So I always say if I could go backwards, and I started this process when I was 25, and when I was 25, I thought I was too late. Like I felt like I was already behind the 8 ball. What's funny is a lot of people think that, oh man, he's so young.
25, you're nuts.
Right. But in my mind, I thought I was way behind the 8 ball. But I always wish that I had started sooner. Like there's no reason why I couldn't have gotten started in this process earlier. And so I'd recommend anybody who's listening, in terms of like a takeaway, is if you're interested in this, start now, right? Like you can't start earlier than you are right now, but you can start right now. It's sort of like that old proverb, the best time to plant the trees 30 years ago the second best time to plant a tree is today.
Right now.
I would say prioritize getting in front of investment bankers, business brokers. As I mentioned, it takes a long time. And so it doesn't necessarily need to take as long as it's taken me. As I mentioned, the escape velocity that I needed to achieve was just so much greater than I think most people are. But for on average, it takes about 18 months to get these things from start to completed, acquired. And so that's what I'd recommend is just start as soon as possible. Put the effort up, get on conversations with business brokers, have conversations with investment bankers, have conversations with business owners, and get the word out that you're looking to buy a company and make some offer.
Fantastic. Bakari, I really appreciate you coming on my show. Thank you.
Thank you very much, man. Thanks for inviting me.